Is there anything these central banks can do to flush investors out of those long duration positions and get us out of core government bonds and into equities, into high yield?
Yeah, so this is what Richard Coos called a balance sheet recession, right? So low rates should theoretically make me, want to borrow, but effectively the dynamics in the market aren't making me borrow. So borrowers aren't borrowing right now, so you're not getting that upsurge in the money multiplier by there being, more economic activity coming as a result of these low rates. That's what we're missing, and that's the whole point of a liquidity trap, which is where I think we are.
Winnie, you agree?
Yeah, I mean, from the credit perspective, it's really just tough with a flat curve to borrow short, lend long, and be economic. And so there are a lot of credit investors who are looking at their portfolio saying, I'm up 8-9% on the year. If I sit here, clip a coupon, that feels like a really good year after last year, especially. And, I think there's always that first wave of skepticism regarding central bank policy and whether or not it's actually going to extend the cycle. In 1995, when the Fed was doing its insurance cuts, investment grade was the big outperformer. 95 was the top performing year in the IG market, while high yield lagged. And so there's always just kind of that first wave, and then it takes a while to get the investors to actually start to reach for yield.
Andres, final word?
Yeah, inflation expectations have been falling already before the Fed has done anything, and that's worrisome, right? Because to your point, I think that's why the bond market is doing what it's doing, which is they're basically saying, we call you a bluff. I don't think you actually have any availability of actually moving this up. You could look at Japan as the worst case scenario, where you could throw literally the whole balance sheet and it hasn't done anything.
Yeah.
So that's a concern, and one of the reasons that I think they have to be careful about making actually the move of cutting rates maybe a little bit too soon.